Stock Talk with Scott. This is your host, Scott. Hope you had a good day of trading Friday and a good week. We're going to do something a little bit different tonight as far as the video goes. We're going to start out with a little presentation, to kind of give an idea where we are for the year so far. We're going to kind of look at some things too as far as some of the trades that we made early in the year with some ETFs, and kind of take a look at where we would be if we'd held on to those ETFs, just to kind of give you an idea of what kind of year it's been and the opportunities we either took advantage of or could have took more advantage of. But want to just kind of do a recap of what's been going on for the year, because we're coming up on the last quarter here. So hoping for a good end to the year. We've had a good year so far. So let's go ahead and jump over and take a look at this presentation. All right, so let's take a look at that. So 2020 status, let's take a look at that for the year. 2020 has been a bad year as far as 2020 goes, but not for our stocks or the market as far as that goes. The market's done well, our stocks have done well. So let's go ahead and jump over and take a look at that. The Dow so far this year is up 0.24%, a quarter of a percent year to date. That's nothing spectacular, of course, but it's green. And anytime you got some green, that's always good. As long as it's not red, you're doing okay. But the DIA, that ETF that we traded earlier in the year, is up 0.31% year to date. Now, these first few figures I'm giving are all year to date, but we're going to take a look at some specific numbers as far as when we bought things and things like that in the presentation as well. Okay, so the S&P is doing a good bit better than the Dow, up 7.83% for year to date. I'll take that every year. That's a good year in my book. I'm trying to shoot for 6%, so the SPY being up 7.9% is a very good year as far as I'm concerned. Now the NASDAQ, that's the big winner. The NASDAQ's up 30.08% year to date. And wow is all I can say to that. That is a good return. Who wouldn't be happy with that kind of return? Maybe the folks that are holding QQQ, which are up 35.70% for the year, that's extremely well, extremely good year for them. So good for them if you bought into that at the beginning of the year. Now, where would we be? Where would I be if I had just bought those ETFs and held them? The ETFs I'm speaking of for the Dow would be DIA, for the S&P is SPY, and for the NASDAQ is QQQ. Now, if you recall, we did buy those earlier in the year. But I did sell mine at a nice profit earlier in the year. Okay. Again, my goal is 6%, and anytime I get 6% on some money that I've invested, I'm going to take that a lot of times. So that's what I did. I actually sold a couple of these more than once. So we're happy with what we did with them. But they did keep going. So I want you to see that. We're going to look at that. If I would have held, here's where I would be. Okay, the DIA from where I bought it, which I did not buy the bottom, is 29% up from where I bought it. Okay, back in the early part of the year. I actually bought it before March, which was the low. The SPY up 37%, and the QQQ up a whopping 66% from where I bought it. Okay, and I missed the bottom on all three of these. Like I said, a lot of times is, I very seldom make the bottoms, and that's just the way it goes. I very seldom sell at the top, and I very seldom buy at the bottom. But the goal is to make money, and you can do that without doing either one of those. So, but that's where you'd be if you'd bought where I bought them and held on to them to this day. you would be up those percentages on each one of those. Now, if I would have bought the bottom, which was on March 23rd, 2020, which I did not, but if you had done that, or if anybody had bought the bottom on the 23rd, that's 56% over on the Dow, DIA. SPY's up 59%, and the QQQ is up an incredible 74.9%. So think about that for just a minute, about the bottoms. Okay, a lot of times, you're not buying the bottoms. If you're like me, you're buying it a little bit too early. I wished I was better, but then again, you don't want to miss the opportunity. So, but this is a perfect example showing you that when everybody else was panicking, when everybody else was selling, if you had been buying, you could have made a tremendous amount of money if you still were holding those ETFs. We did well on them. We did very well on them. But I didn't get the bottoms. I bought them in February, I believe it was, and on March 23rd is when it actually got to the lows. So here's what you could have done in a short period of time, March 23rd, and we're coming around October, so you're talking about 7 months and that kind of return. That's good in anybody's book. All right. So, but if ifs and buts were candies and nuts, we'd all have a Merry Christmas, right? You've all heard that saying. That it's nice to think like this and look at things like that, but we did make money. I mean, we did make money. We did sell ours earlier than these big giant percentages you're seeing. But again, I did trade a couple of these twice, I believe. And I don't remember when I sold it, but I know it was over 6% on the sales, totaling over 6%. So that's my goal. And so we met those goals there, and we're doing good for the year. Okay, it's not Christmas yet, but that does not mean it has not been a good year. Okay, and we are beating the Dow as far as the returns this year. We're beating the S&P. Those two are pretty easy to beat, but the NASDAQ is a hard one to beat, but we're beating that as well. Okay, so not going to complain with what we've done this year. We've made some good buys, made some good sales. We've done it several times with several stocks. Done a lot of trading, gotten in and out quickly on some of these things, pocketed money very quickly, and happy with that. Happy with the return. The overall return has been fantastic as far as where we're at for the year. And we want to just try to maintain that the rest of the year if possible. And we don't want to get too crazy and try to risk too much here near this election. So my goal is 6% per year. I'm retired. I want to stay retired. And so far, so good this year. We're well above that 6%. And that means we got another year of being retired under our belt without having to worry about anything. So, or going back to work. The lesson for 2020, and this is actually a lesson for most years, is first of all, keep that dry powder, keep that cash on the sideline, and set you a goal there and try to stay at that goal. What the reason we do that is for the very reason what we saw back in March is those pullbacks from January through March, actually, and those giant pullbacks. That was a big pullback. I mean, that was huge. I mean, I think it was 30-something% at one time. If you can get through that and make money that same year, then you're doing real good. And the only reason we were able to do that is because we had about 30-something% cash when it dropped, and we put that money to work early. So that's why we were able to do that. So keep dry powder, keep cash on the sideline. Have your goal to have a certain amount. All right. The second thing, and one of the most important things always is do not panic. We see so many folks when those drops happen like that, they'll start selling their stocks. They'll start doing the wrong things. And that's only because they're panicking. The worst thing you can do when the market drops is to sell everything and put your money on the side then. It's too late. You gotta ride it out at that point. If you're smart, you're going to ride it out. Now, does that mean every one of your stocks is going to come back? No, no. And if you look at the market, there's a lot of stocks that are still down, but most of them have come up, about at least halfway from where they were. They're sure not near the bottoms anymore. And it's just going to take time, and they'll be back, and you'll be in fine shape. And especially if you were able to put some to work and you were able to cost average some of those. I don't like to cost average a whole lot during that period of time because you're tying up your cash. Because it takes a long time to come out after you've cost averaged something sometimes. Now, I don't mind buying new things and then cost averaging them, but got to be careful how much you cost average on stocks that are down real far. You want to be real careful how you do that. All right? So swim against the stream. That's just doing the opposite of the crowd. That's, when everybody else is selling, you want to be buying. When everybody else is buying, you want to be selling. I mean, it's just the way it goes. It's kind of like buying a house. If everybody's trying to buy, that's probably a good time to sell because you'll get the best price. Same with stocks. Swim against the stream. Jump in. Don't be afraid to jump in when the water looks murky, like it did back in January and February and March. The water looked really murky, but sometimes you just got to take a chance and jump on in there. That's all part of having a strategy. We've got a couple of videos out there. I encourage you to go watch some of those strategy videos and develop a strategy. Try to stick by that strategy. That keeps you from going nuts when things go crazy, and it keeps you focused. So if you've got a strategy in place, you don't have to worry about things. Okay. Next is have goals. The last one's have goals. Goals are a good thing to have. Always a good thing to have. And you want to monitor those goals. That's all part of that strategy video. So encourage you to go watch that. And like I always say, is to have fun. If you're not having fun doing this, you might want to try something else. Let somebody else handle your money. But it can be done. It's not hard to do. But you've got to have strategies. You've got to have a certain mentality for it. Especially when things are not going well. It's easy to do when everything's going up. But it's when things go down, it's when you're really testing yourself. So have fun at it. Don't lose any sleep over it. And that's what we want to do. Have a great day. And we'll holler at you later on in the week, maybe Wednesday or so. And we'll put together another video. And we'll talk to you then.